Hello, and welcome to Transforming Giants, the investor's role in shaping sustainable changes at Microsoft and Coca-Cola. I'm delighted to share that today's webinar is sponsored by our good friends, Green Century Funds. Hi, I'm Paula De Laurentiis. I'm the CEO of equities.com, and I'm thrilled you could join us today. You may not be familiar with equities.com, and therefore I'd like to share a little bit about us. We're a financial media company focused on impact investing. We distribute news, we offer education, and we provide information about companies offering products, services, or solutions that make positive changes in the world. Our goal is to provide financial advisors and individual investors with a destination to discover investment options, share expertise, and use our tools to support investing in mutual funds, ETFs, and individual companies. For today's webinar, our moderator is Paul Ellis, a good friend and a nationally recognized expert on sustainable investing. And he's also the host of the popular Sustainable Finance podcast, a weekly program featuring conversations and thought leaders in our field. And with that, I'd like to hand this off to Paul.
Thanks very much, Paula, and we appreciate your inviting us to join you today. And thanks to Leslie and Annie from Green Century for joining us. I'm going to tell you a little bit about each of them, and then we'll move into the question, the answer, or the actual body of the webinar today. So Leslie Samuel-Rich is the president of Green Century Funds, a mutual fund company focused on environmentally responsible investing. She's led the company since 2012, overseeing significant growth to about $1 billion of managed assets. Leslie has over 25 years of experience in corporate engagement, environmental, and public health advocacy. Her background includes an economics degree from Boston College and a career that began in the nonprofit sector. She has been recognized as an influential figure in sustainable finance, named to Forbes 50 Over 50 list in August of 2024. She was also included in Barron's 100 Most Influential Women in U.S. Finance for 2 consecutive years, in 2023 and 24. She's listed in Inside Climate News, their inaugural Climate Action 30 in 2022. Samuel-Rich is known for her strong positions on issues like fossil fuel-free investing and greenwashing. She serves as a guest lecturer on impact investing at the Wharton School. Under her leadership, Green Century has secured major environmental wins through shareholder advocacy, including policy changes at companies like Microsoft, Disney, and major hotel chains. Samuel-Rich emphasizes the importance of both competitive financial returns and real-world environmental impact through shareholder engagement. Leslie has established herself as a prominent voice in sustainable investing and combining financial expertise with a strong commitment to environmental advocacy. Welcome, Leslie, to today's program.
Thank you, Paul.
It's great to have you here, and it's great to have you joined by Annie Sanders, who is Director of Shareholder Advocacy at Green Century Funds, where she leverages the firm's position as a shareholder to drive companies to adopt more environmentally sustainable policies and practices. Key points of her background include she joined Green Century in 2022 after spending 16 years at Green Corps, where she worked on campaigns to protect the climate, expand clean energy, promote land conservation, and protect wildlife. She holds a BA in Environmental Studies from the University of Chicago. In her role at Green Century, Sanders leads efforts to engage with companies on various environmental issues, including reducing plastics pollution, protecting forests and preventing deforestation, promoting sustainable packaging, advancing climate change initiatives. She's been involved in successful engagements with major companies, such as pushing Cisco to reduce plastic packaging and encouraging Lowe's to improve sustainable wood sourcing practices. We have some, I'm sorry. Annie is also working on the importance of identifying companies that are well positioned to drive change, but may be lagging behind their peers in sustainability commitments. And she sees Green Century as ESG trailblazers, often being among the first investors to engage with companies on specific environmental issues. And he plays a crucial role in Green Century's mission to use shareholder advocacy as a tool for driving environmental improvements in corporate practices while seeking competitive financial returns. Now we're going to move on to the webinar portion where we're asking our two experts to answer some questions that we have. And of course, our listeners are fine with submitting questions anytime during the program, and we'll spend some time on those questions at the end of our formal presentation. Leslie, this first set of questions are for you. And the first one is, tell us about Green Century and its investment strategy.
Sure. Well, thank you. And thanks for everyone for tuning in today. Green Century was founded in 1991. So we're one of the pioneers in sustainable investing. And we follow a three-pronged approach. The first is our investment strategy, which I'll come back to in a second. The second prong is our shareholder advocacy program, which Annie directs, and we're going to dive into in greater detail. And the third is unique for mutual funds in that we're 100% owned by environmental nonprofits. And so those are the organizations that started us back in 1991. And what that means is that 100% of our proceeds, our net proceeds, belong to those environmental and public health organizations. For those of you familiar with nonprofits, they're called the Public Interest Research Groups, or the PIRGs. And they've been around since the 70s, working on behalf of citizens all over the country to improve state and national policies. As far as our investment strategy goes, in all three of our funds, we use ESG data. We also are a big proponent of screens. So that is to provide the value alignment for people. So if a lot of people come to this space because they just don't want to be in certain industries like tobacco or fossil fuels. And so we have screens across our funds that keep your investments out of those environmentally dangerous industries. And then the third is that, especially in our balance fund, we're investing in green solutions through our bonds. And so 70% of the fixed income holdings in our balance fund are green bonds. So helping retrofit the bus system in Mexico City, or here in the States, working on making buses cleaner in San Francisco.
Okay. Well, thanks for that introduction, Leslie. We'll be back to you soon. But now we're going to turn it over to Annie. She's has a list of questions that she's going to focus on that are related to the engagement processes that Green Century does with companies for environmental improvements. So, Annie, take it away.
Great. So first, thanks so much for having me. Nice to be here. Thanks all for joining. I'm going to just first talk about some strategies that Green Century Funds uses to influence large corporations to adopt more sustainable practices.
Okay.
So yeah, first off, we identify environmental issues that pose risks to our portfolio companies through research and conversations with external stakeholders and experts. We determine which of those risks are most material to a given industry or company, and then we send a letter of inquiry out to about 50 companies each year to inquire into their risk mitigation strategies on different topics. After dialogue, we determine if we determine that the company is in fact adequately mitigating the risks that we've raised, or the company's willing to adopt a new policy to do so. That's great. We'll get written confirmation of that. We'll move on. But if not, we will often file a shareholder proposal to bring the issue before the company's shareholders because we feel that the issue is that important. So last year, for example, we talked to 54 companies and filed 42 shareholder proposals, asking the companies to take a particular action to reduce their contribution to climate change, mitigate plastics related risks, eliminate deforestation, et cetera. So we'll typically end up withdrawing about half the proposals that we file in exchange for a commitment from the company to address the environmental risks that we've raised. So for example, we filed a proposal at Costco this past summer asking the company to address risks posed by deforestation in its Kirkland Signature brand supply chain. And then we ended up withdrawing that proposal after the company committed to conducting essentially a comprehensive deforestation assessment and then putting out a deforestation action plan next year. So that's just an example of the kind of commitment that we might withdraw our shareholder proposal for. And we withdrew 20 proposals for a commitment last year and then won 6 commitments from dialogue alone.
Okay.
Yep.
Yeah, Andy, I'm gonna come back to you about the differentiation between a commitment and following through with a proposal. I want to go back to Leslie with another question about the strategies that Green Century Funds uses to influence large corporations to adopt more sustainable practices. Does your approach differ, Leslie, depending on the type or the size or the industry that the company is in?
Not really. We approach companies in the same ways that Annie outlined for us, giving every company a chance at the beginning of the shareholder season, which runs like a school year, to address our concerns. And then, as Andy described, if need be, we keep escalating through the proxy ballot and then further negotiations. But we'd like everyone to get the same opportunity to meet with us and address the risks that we're posing.
Okay, great. So Annie, back to you. Can you walk us through a specific example? I believe you mentioned Costco, but tell us what the steps are in that process of engaging with a major corporation.
Absolutely. I will talk about an example on the issue of plastics.
Okay.
So people are probably aware plastics kind of burst onto the global scene about 50 to 60 years ago or so, perhaps nowhere more memorably commemorated than in the film The Graduate with the line, "I just want to say one word to you, just one word, plastics."
I remember it well.
Yeah, I'm sure many people do.
Dustin Hoffman's first big, opportunity.
Big break. Right, exactly. Everybody remembers that one. Yeah, and in the 50 plus years or so since that movie came out, plastic bottles have become the second most common litter item found in our oceans. Tens of thousands of marine animals have consumed or become entangled in plastic. 11 billion plastic items have caught on coral reefs across the Asia Pacific region alone. And everybody's probably seen the photos of whales washing ashore with stomachs full of plastic waste, sea turtles with straws up their noses. Unfortunately, this stuff is pretty visible. Unfortunately, recycling isn't the answer. About 9% of all plastic waste created to date has been recycled ever. And then recycled content pledges, where companies, commit to having a certain amount of recycled content in their plastic products. That's good, though it would have a minimal impact on the problem. And ultimately, plastic recycling facilities do release huge quantities of microplastics into the environment, which is bad for human health and the planet. So because plastics are so ubiquitous and the problems are so clear, we started working with companies across a variety of industries on this issue. So hotels like Marriott and Hilton, toy manufacturers from Disney to Mattel, office supplies and consumer goods companies, worked with all those kinds of companies to reduce their plastic with a focus especially on single-use plastics in their packaging materials. I think everybody can agree with the idea that nothing we use for 5 minutes should pollute our environment for hundreds of years. So one of the companies we decided to engage on this topic is Coca-Cola. And one of our advocates a few years ago was listening into one of their quarterly analyst calls and realized they didn't have a plan to reduce their use of plastic. So after some initial engagement with the company, we ended up filing a shareholder resolution. And then we were able to withdraw it when the company agreed to reduce its production of new plastic by 3 million metric tons by the end of 2025, which is the equivalent of taking 200,000 plastic bottles out of the waste stream every minute for a year. So pretty significant commitment there. And that was a huge step for the company. We continued our engagement the following year and focused on increasing the use of refillable or reusable bottles and asking the company to really ramp up its use of refillable containers. Some of you perhaps those of you who also remember The Graduate, may recall using refillable bottles as a kid. You'd buy a bottle of soda from the store, it's labeled, be kind of worn, and it was obviously not the first use of the bottle. You'd then return the bottles to be cleaned and put back into circulation. In the last 40 or so years, most of this infrastructure in the US has actually been dismantled, but it's still in use in parts of South America and Africa. And about 14% of Coke's current global beverage distribution is actually through refillable bottles. So we engaged the company in conversation. We then ultimately ended up filing another shareholder resolution on this particular topic on reuse and refill, and then withdrew that proposal. We were able to come to an agreement with the company wherein we withdrew our proposal in exchange for a commitment from Coke to set a goal that 25% of its beverages would be dispensed in refillable or reusable containers by 2030, which is pretty significant. That means that 173 billion beverages could be sold in reusable packaging by 2030. And that just keeps a lot of plastic out of the waste stream, and it was the first known goal of its kind.
Now, Annie, that's great information. I'm all for getting plastic out of the waste stream and the environment, and I'm also a shareholder. So, what balance are you striking in these sustainability initiatives when you're ensuring these changes don't negatively impact a company's financial performance? How are you doing that?
Yeah, great question. And I think at the end of the day, we feel that these kind of policy changes that we're advocating for will ultimately, if not also in the near term, but certainly long term, benefit a company's bottom line. But also for a lot of these issues that we engage on, we also believe it'll impact positively the company's bottom line in the short term. And at the end of the day, all companies depend on the natural world for their business. Mm-hmm. More than half the world's GDP is either moderately or highly reliant on nature's services. And by some estimates, tens of billions of dollars in assets could be at risk of stranding over the next 5 to 10 years if companies continue to produce commodities that drive deforestation, which is also a major contributor to climate change. So there's all this information out there saying that these issues are important, not only from a kind of global planetary, life on Earth perspective, but from a business perspective as well. There's just a growing realization that to ensure we have a planet to operate businesses on in the future, companies need to figure out how to give back more than they take from it in the present. And ultimately, financial flows need to be redirected away from activities that harm nature. So to that end, we at Green Century do work to push our portfolio companies forward on their nature positive journeys and to fundamentally reimagine their business models for a sustainable future, which we believe will ultimately benefit their bottom lines by helping to ensure the health of the ecosystems upon which they depend.
So that's great work that Green Century is doing as a shareholder. These are giant corporations. I mean, they do business all over the world. What are some of the challenges that you face when you're advocating for change at these multinational companies that have products distributed across every continent on Earth? What kinds of challenges come up in that process?
Yeah, I think one of them is that larger companies can sometimes be harder to get a conversation with, frankly, and they can also be a little bit more set in their ways in terms of the systems and approaches that they've established to tackle the issues that we're raising. But on the flip side, they've often also dug deeper into the complexities of climate and nature risks, and so just know more about the ins and outs and how it might affect their business. And they've also got a lot more resources they can devote to pilots, mm-hmm. to scaling up those pilots, to actually implementing the policy changes that we're talking about. So there are definitely unique challenges, but there are also real opportunities, I think, in engaging with some of these large companies.
Okay. Now, somehow Green Century and other investment companies need to be able to measure the impact, right? The real world environmental impact of your processes of shareholder advocacy and interaction with these big corporations. So how do you implement at these large companies? You must have to interface with multiple divisions and communities, even within these large corporations, to get the right data and metrics.
Yeah, definitely. So as I mentioned earlier with Coca-Cola, sometimes we're able to run the numbers and calculate stats like the company's commitment equating to taking 200,000 plastic bottles out of the waste stream every minute for a year. Mm-hmm. That really puts a fine point on it. You can understand the impact. But it's not easy to always calculate numbers like that. So for example, when we reached out to Microsoft last year, we were concerned about the impacts of electronic waste or e-waste that the company was on track to generate due to expiring security support for Windows 10. Many of you probably have a Windows 10 computer out there, perhaps even that you're tuning in on. E-waste, unfortunately, is one of the fastest growing forms of solid waste, and only a small percentage of it is recycled. And the vast majority of the environmental impact from electronics is not from the electricity use, but it's actually from the carbon and the materials needed to produce the equipment, to produce the computer in front of you. And enhancing the life, or lengthening, extending the life rather, of consumer electronics is actually the best way to cut down on the environmental footprint of the industry. So for example, just extending the lifespan of phones from 3 to 4 years could reduce the number of phones sent to waste annually by 25%. So pretty huge. So when we approached Microsoft in the spring of 2023, we'd come across a report suggesting that the end of support date for Windows 10 could cause the single biggest jump in junked computers ever, with up to 400 million devices potentially unable to upgrade. So essentially, Microsoft's planned end of support date could have led users to just toss their computers just because they couldn't get a security update, which doesn't make sense. So we filed a shareholder proposal at Microsoft in June of last year. And after several rounds of negotiation throughout the summer, we agreed to withdraw our proposal in exchange for Microsoft announcing that it would extend Windows 10 security updates for organizations of all sizes. So schools, the public sector, and for the first time, individual people. So that was a huge step. And will this policy change at Microsoft definitively prevent 400 million laptops from heading to the landfill? Maybe. We can't say that for sure. But it makes it a heck of a lot more likely that more people will hang on to those devices for another year or two, preventing millions of tons of e-waste from polluting the environment. So that's a case where it's a little bit harder to quantify it as exactly as we're able to do with the Coke bottles, but you can get a sense of the kind of scale and size of the impact that we can have.
Yes. Okay. So I'm in the process right now of looking at what kind of computer I'm going to exchange my computer with the Microsoft 10 operating system in it. And the whole idea of recycling and circular economy use of the old computer is something that I'm using or I'm looking into as part of that process. And I think what you're suggesting is that you give not only companies that own millions of laptops, let's say, throughout their employee base, but you give individuals like me, small business owners like me, the opportunity to consider these issues as well. So I appreciate that work on Green Century's behalf. Can you discuss how Green Century's approach to reducing single-use plastics differs at two different companies? And we'll use Coca-Cola and Costco. What does it look like that's different between those two large corporations?
Yeah, great question. Two big companies, very different types of companies, different business models. So we definitely approach the issue slightly differently, though at the core of our approach is the idea that there is too much plastic being used. It is not necessary, and we need to figure out ways to reduce it to avoid these huge problems and risks posed by plastics in our oceans and in our environment. So with Coke, single-use plastics are unfortunately pretty close to the heart of their business. A lot of their beverages are just delivered right now in single-use plastic bottles. With Costco, it's not necessarily at the core of their business, and they have a little bit less control over how some of their third-party products are packaged. But for both companies, and to different degrees, perhaps it's in their financial best interest to reduce plastic packaging. For Costco, for example, ultimately it cuts packaging costs. Like if you just use less packaging to wrap all your stuff in, you're not paying as much to wrap all your stuff in all that packaging. It's pretty straightforward. It also helps them boost their reputation as a company that's looking out for the planet, which is increasingly important as research is showing that consumers' demands for sustainability are growing, and it's influencing their buying choices. So in response to the growing global crisis of single-use plastic waste, we approached Costco to discuss how it could expand the scope and scale of its plastic reduction efforts. We did that last summer and ended up filing a shareholder resolution since the company wasn't willing to take additional action to reduce plastic at the time. That proposal, though, the filing of that proposal did get the company to the negotiating table, and we were ultimately able to come to an agreement to withdraw our proposal in exchange for the company committing to basically figure out and then disclose the plastic footprint of its Kirkland Signature brand. Everybody's probably heard of Kirkland Signature brand. I know there are many loyal Costco customers out there. In fact, I think 1 in 3 Americans or something on that order of magnitude is a Costco customer. So probably a lot of people on this call. Kirkland Signature is their in-house brand. The company agreed to figure out the plastic footprint for Kirkland Signature and essentially disclose that information. And then they also agreed to put out a 5-year plastic action plan in December of this year that will essentially outline the steps the company will take to reduce total plastic in its Kirkland Signature packaging. So there are differences in how we approach this issue at different companies and how we make the business case, but we definitely rely on the fact that not only is this a big reputational risk for companies to not address their plastic pollution and ultimately mitigate it, but we also talk about the positive reputational opportunities that companies can really capitalize on by cutting plastic packaging, especially in the case of a company like Costco, and really replacing single-use plastic with reusable containers at a company like Coke. So it depends on what role plastic plays in their overall business model, but those are some of the factors that influence our approach.
Yes, I had a podcast guest late last year, a small company in Albany, New York, that makes plastic bags, all different kinds of plastic bags. And the owners were in a transition period to reduce their consumption of plastic and produce their products more sustainably. And the CEO said he went to the head of his engineering group and said, okay, what do we need to do to reduce our consumption of our use of plastic by 25% in 2 years? And he said the head of engineering went crazy. He said, well, we'd have to do this and this and this and this and this. And he said, yeah, okay, so start tomorrow on this process. And by the end of the 2nd year, I want it to be completed. And so that's the kind of small company focus that can be brought to these situations. But you're working with companies that have 1,000 or 10,000 people to answer to around these kinds of issues. So what's the most effective way that you've found to prioritize sustainability initiatives within a big company like this? Is it from the top down? Is it working directly with the corporate head of sustainability? Do you get into the C-suite with any of these negotiations or conversations?
Yeah, it's a good question, and it depends on the company to some degree. But we'll often start by reaching out to the head of investor relations, and if we have contacts within the sustainability department, we'll also reach out to the head of sustainability. And those entities are, I think, who we most often interface with, at least initially, but really throughout the process. Honestly, we have found that dialogue can be really productive. Simply bringing the issues, or the risks, to the attention of investor relations and the sustainability department and others in executive leadership can be really helpful. And sometimes they've been thinking about these issues and how to respond and are really interested in working with us as a collaborator, as an issue area expert to help inform their policies. That happens sometimes. And then sometimes, the company's just not interested. And so we found that filing a shareholder resolution in that case often gets companies to the table if they're not open to dialogue initially or just not responsive. And then even if companies are willing to engage in dialogue, but they're not really interested in taking further action on the risks that we've raised, filing a shareholder proposal can often motivate companies to negotiate for the withdrawal of our proposal, as companies generally do not want shareholder proposals on their proxies. Just doesn't look great. It invites it invites unwanted attention on potential gaps in their policies and risks that they're exposed to, and it's generally something that they don't want to deal with. So they will come to the table to negotiate to get the proposal off their proxy. And then even if companies are not willing, bottom line, to fully implement our proposal or what we want and think that they should do to fully mitigate the risks that we're raising, we're often able to negotiate a middle ground wherein the company makes incremental progress or takes a couple of steps toward where we think they ultimately need to go. And that gets them close enough. And we're, sometimes in that case, willing to withdraw a proposal as well.
Okay, so Leslie, I'm coming back to you with this next question, and that is, you've been at this now as president of the Green Century Funds for a dozen years. And how do you see the landscape of corporate sustainability evolving, particularly among the very largest Fortune 500 companies, and like the companies we've been talking about today, Microsoft, Costco, Coca-Cola?
It's really changed, I would say. So, like 10, 15 years ago, the people that we talked to, sustainability officers and investor relations folks, they were some companies didn't even have positions like this before. So
Okay.
you'd end up talking to maybe an equity analyst or maybe someone investor relations and then or a PR person, kind of put a spin on things. But I think as investors and consumers have gotten more tuned into these issues and how they can be both material risks, and we just want companies to leave us a cleaner environment, that companies have responded. And they have responded in large part because I think they see it in their interest. There are some brands like Starbucks who see sustainability sort of woven into their whole value proposition for their customers. But even companies that, aren't built on a sustainability focus have taken a lot more steps. And so we are getting more engagements and successes, even in despite the recent pushback against sustainable investing. And so there was a little blip, I would say, in the last year. I thought, and Annie thought, maybe Annie was more optimistic than I was, but I thought last year it was going to be difficult to get as many policy agreements with companies. And so the year before we had gotten 20, which was our highest number ever. And that was our goal for this last shareholder season. And I thought, well, the big firms like BlackRock and State Street and Vanguard, they're not voting with any proposals anymore around climate change or plastics necessarily, or any of these other social issues. So we may not have that lever to pull after the shareholder resolution gets voted on. But despite the fact that we got, and everyone got lower votes last year, we actually ended up with 26 policy agreements. And so I think that even though companies have not been as vocal about it, they don't want to publicize it as much. They may have taken the words ESG off there, or they may have buried it on their website a little bit more, that they are still marching forward. And our conversations and results sort of speak to that. And that is very encouraging. And so I think that if under this latest attack, that if they've kept doing that, then surely they're going to keep doing it in the future, because among other issues, climate risk is a risk to companies in every sector, in every place in the supply chain. And they actually need to deal with it to be around for the next 5, 10, 50 years.
Yeah, I think you're absolutely right. I was just reading an article the other day that said over the last 5 years, the average return on investment mutual funds that have sustainability criteria attached to them was 4.7% better than mutual funds as a whole, and that BlackRock, who you mentioned, they now have $1 trillion invested in ESG focused funds. So I don't think they're backing off at all. In fact, they're just being quiet about the fact that they're reinvesting, I think, in these types of portfolios. So good for Green Century for the work that you've been doing all these years to just keep going. So, all right. So, Annie, back to you for a couple more questions. What role do you think consumer pressure plays in complementing shareholder advocacy efforts, especially for consumer-facing companies like the companies we've been talking about today, Costco, Coca-Cola, et cetera?
Yeah, it's definitely important. that a company hears from its consumers that they want it to adopt more environmentally sustainable practices. It certainly helps to support a reputational risk argument from an investor perspective. And frankly, if there's consumer pressure on a company to act, that really helps support the case that we're able to make as shareholder advocates. This is something that your customer base cares about. This is a reputational risk issue. And a company hearing the same message from different stakeholders can really just amplify the strength of that message. And furthermore, I'll say we do track what NGOs are doing. In large part, reputational risk comes from NGOs or nonprofit groups kind of shining a spotlight on what companies are doing on a particular issue or not doing. And so if they're creating some kind of reputational risk, that can often be a good time to go talk to the company because that risk is more front and center. So definitely makes a difference.
Okay. And Annie, finally, one last question for you, and that is, how does Green Century's work in managing electronic waste, which Leslie, I think, mentioned a little bit earlier, or you did in your remarks, particularly with tech companies like Microsoft? And how do you tie this into the broader sustainability goals that you advocate for?
Yeah, this is a great question about a topic area that I think has been emerging recently in this public sphere. I mean, this is the idea that we should have the right to fix our own stuff. Groundbreaking, right? It's kind of basic, but not long ago, most consumer goods were actually easily repaired with parts that were widely available, whether it's your tractor or medical devices, phones, laptops. But more and more manufacturers of these kinds of products have thrown up all these legal, digital, and physical barriers that actually prevent people from just doing their own repairs or using independent repair shops. That's it just is kind of absurd. So the result is, as we've talked about before, a massive amount of waste. And in fact, as I mentioned, electronic waste is now one of the fastest growing waste streams in the world, and continuing to consume electronics at this rate is just not sustainable. So especially the other kind of factor here is that there's regulatory risk increasing. So that means essentially that various governments are passing laws telling companies they need to act in a certain way or comply with laws that will ultimately be costly for them unless they kind of act to get ahead of the problem. There are laws getting passed called producer responsibility laws or extended producer responsibility laws. There have been multiple of these laws passed in states around the country that effectively make companies responsible for the waste that they create. And so companies are facing real financial risk here and need to adapt. So these efforts to kind of curb e-waste and expand the right to repair our stuff is all part and parcel of building a circular economy where we make our stuff last longer, fix it when it breaks rather than tossing it, and just reducing, reusing, recycling, and ultimately ensuring long-term sustainability for both the companies we invest in and life on Earth.
Okay. So Leslie, finally, Annie was just talking about what I think is referred to as right to repair in legislation and regulation now that is being passed around the country. Can you share some insights on how Green Century balances its dual goals of driving environmental improvements at the same time that you're maintaining strong financial performance for your investors? And I would imagine right to repair is factored into this question.
Sure. Yeah, thanks. We are always seeking competitive returns for our investors. And we are a mutual fund. We hope people invest with the Green Century funds to save for their future. And I'm not going to cite any of our track records, but one, that would require a lot of disclosures. But two, I invite people to go and look up our funds on our website at greencentury.com. But for us, it's also about bringing real world measurable change for people who invest in us. I think that is one of the things that drives people to choose Green Century among other options. And that's because we really do put a priority on making an impact and then showing people how we're making that impact. I think most people come to sustainable investing, at least a lot of the Green Century investors, because they want to keep their money out of industries that they just don't want to be associated with, but they want to see how their money can make a difference. Every investment you make some signal to the market and some kind of decision with whether you're intending to or not. And so a lot of people have chosen to be like, I recycle, I maybe am thinking about buying an electric vehicle, and why not do the same with my money? Let me just see how I can make the most impact with that. So we think about both things, because that is part of the value proposition that we have based the Green Century funds on.
Okay. So now we're going to move on to the questions from our audience. And we're putting up some disclosure information just so people have an opportunity to quickly review that. And let's move on to those questions. And you,
Well,
Leslie,
yeah.
go ahead. Go ahead,
Yeah.
Leslie.
I put some in order in the chat, and
Yes.
then been trying to answer some of your questions while Annie's been talking, because I know we won't get to everything.
Okay. So the ones in the Q&A box you haven't gotten to yet, is that right?
No, I have. They're in the
Oh.
chat for you.
The chat. Okay, great. All right. So let's see.
And again,
Okay.
keep putting them in. We'll get through as many as we can.
Sure. Okay, Annie, this one's for you. How do you measure that a policy has been implemented?
Great question. So this is something that we track really closely, right? We win all these commitments, and it's a lot to track, both to tally the numbers for any given year and try and measure the impact that we're having in any given year. But then ultimately, the proof is in the pudding, right? Like, it's all well and good for a company to say they're going to do a thing, but then we need to actually follow up and make sure that it's happening the way that we discussed, and or if not, why, and follow up with the company to make sure that ultimately the change happens that we were pushing for. So we have follow-up engagements with companies. Usually within any withdrawal agreement, we'll include an item saying that the company agrees to discuss with Green Century the follow-up and implementation of this commitment at as reasonably requested, or every year, every 6 months. And so we'll keep track of that, and we'll actually follow up with a company to make sure essentially that it's delivering on what it said it would do. And by and large, companies do this. So the withdrawal agreement itself is a signed document that we both agree on in companies, and we take them seriously. And Ceres actually put out a great report this past summer. Ceres is a nonprofit that tracks a lot of investor engagement and facilitates investor engagement with companies. And they put out a great report in July, essentially looking back at the last 3 years of commitments, withdrawal agreements from companies, and asking the question, does this work? Do companies actually follow through on these? And by and large, most companies that they'd tracked, and this is hundreds of withdrawal agreements, some 75% of companies on that order either fully or largely implemented the stipulations in the withdrawal agreements for the last 3 years. So that's pretty significant. Doesn't mean every single company every single time hit every single item, but most companies did most of what they committed to.
Okay. Leslie, this next question's for you. Do all firms use the same process for engaging companies, and how is Green Century's approach different from other companies, other firms?
Okay, yeah, there's been, I think because shareholder engagement or shareholder advocacy, which we call it, has been so successful, and investors have realized that more firms have been talking about shareholder engagement. There are 3 sort of buckets quickly. One is voting your proxies. One is just having talking to the company about all sorts of things like their earnings, their plans, whatever. And then the last is actually advocating for a position. And so we do all 3, but not all firms do all 3, or not all firms do all 3 publicly. And so we vote our own proxies in-house so Annie and I approve each one of them to make sure they're with our environmental, social, and governance guidelines. We certainly talk to get more information, or in this middle bucket, follow up with companies, as Annie said, and as a few people have asked, like, how do you make sure they do the commitment? But just talking to a company and sort of going, so what are you doing about climate change, is not the same as saying, what are you doing about climate change? We think you need to do this. And if you don't do this, we actually might put a shareholder resolution on your proxy ballot. And that, I think, is a differentiating factor for a few firms, including Green Century. We are really interested in getting these real world results. And as much as we can, which another person asked, we try to measure these results in real world terms, like the 200,000 bottles per minute with Coke, or the 400 million computers that we're saving from the landfill. That is difficult, but we try to do that as much as possible because we want people to understand that our shareholder advocacy works, and it is a way for investors to help us and work together to make an impact.
Okay, so this next question is for either of you. Leslie, I'll ask you first. Are you able to push fossil fuel companies to transition?
That's a good question. Starting in 2014, Green Century became fossil fuel free. So we don't invest in coal, oil, or gas companies. And the reason we did that is because we have been doing a lot of shareholder engagement and advocacy with the gas companies in our equity fund. And we were just very disappointed with the results. When we got a company to maybe line their pits, where they put the water that they've used in fracking, they were doing something else, like not capping the holes where the methane can leak out of the ground. And at the end of the day, they're still fracking. One of the things about shareholder advocacy is that you can change policies and practices around it, but you really cannot change its core business. And so I frequently have said, it's like trying to get fossil fuel companies to not be fossil fuel companies is like trying to get Starbucks not to sell coffee. Like it's very, very difficult. It's not really set up for that. And very few shareholder advocates have made any real progress, unfortunately. If you're invested in those companies already, I would say, well, of course you should try. But for us, there's it's not the moral alignment to invest in arguably one of the industries that has caused climate change the most. And we have been much more successful working on other forms of advocacy, which we didn't actually get to talk to, but we have a big program around protecting forests from being burned and razed all over the world for agricultural commodities like palm oil and soy and beef. And that is a very effective way to cut carbon pollution. So while we're always hoping that fossil fuel companies will see the light and transition, they have not made very much progress. And so we are dedicating our efforts in other places.
Okay, good. So Leslie, this one's also for you.
Okay.
Green Century's ownership model is very interesting. How do you interact or work with your nonprofit owners, and what do they typically do with their net profits?
We interact, they're our owners. They came up with the idea starting Green Century over 30 years ago. And so we work with them closely. We learn a lot from them about environmental issues, which helps Annie and her team identify some of the risks that are out there in addition to their own research that Annie and the team do. And then we track, what other nonprofits do. And so that helps us understand, not just with our owners, but other groups in particular, if they're mounting a campaign to expose some really bad practices, that helps clue us into what is happening out there. And then sometimes companies listen to nonprofits, sometimes they listen to investors. Many times it's more effective if they're hearing from both of us. So that's one way we work together. The other is that our net profits belong to those public health and environmental groups, so that we turn over dividends to them every year. Each of the last 2 years, we've given $1 million, and that is a good chunk of change. And that helps support any of the work that they want to do, but particularly campaigns on protecting the effectiveness of antibiotics, which, as you know, is a real issue for all of us to keep safe into the future, or passing state laws to ban plastic bags, or passing other state laws that increase the amount of renewable energy that those states source. So they're putting it to really good use, in our opinion, and that is another way that Green Century investors are making an impact.
Good. All right. Thank you very much. And Annie, back to you. And I'm going to do, how much more time do we have? Let's see. Paula?
We have 8 more minutes.
8 more minutes. Oh, we've got plenty of time. Okay. So Annie, back to you on this one. Can you share innovations on ESG measures themselves? I'm assuming the questioner is asking about metrics and how you measure them and how you consolidate all of that information themselves that make results or impacts more transparent. And what are you prioritizing in your screening processes?
In terms of the kind of results and impacts, how do we make that more transparent, or how do we encourage companies to make that information clearer? You know, when we negotiate with companies, we'll not only ask the company to make the commitment to, for example, set climate emissions reduction targets or to eliminate deforestation from its supply chain, but we'll ask the companies to actually make a public commitment to doing those things and put it either on their website or in their upcoming ESG or corporate responsibility report, or some kind of public format, so that that commitment is not just a private one between us and the company, but it is public for all to see and for investors and other stakeholders to hold the company accountable to. That kind of public record we think is important. We think it's important that the company puts it out there in the public domain and then ultimately lives up to the commitments that it puts out there.
Okay. All right, this next question, I'm going to answer it first before I even ask it, and that is, this webinar is actually an indication of how Green Century Funds is using all of this information that they gather on companies that they invest in. So Leslie, how and where do you share these inspiring stories that motivate you to do this work and other investors?
You would think that I asked someone to ask this question, but I did not. It's a great question. And we share it a couple of ways. One, you can find almost all of this information on our website, which, in a shameless plug, is greencentury.com. If you go to our resources page and drop down, you can look at our press releases, which Annie and her team and our communications director put up all the latest breaking news. If you wanted to get more overviews, like fact sheets, either on highlights for last year or our new deeper dive into an issue, like say you're really interested in right to repair or plastics or sustainable agribusiness and agriculture, we now have 2-page impact reports on all of those issues. And if you're a financial advisor, you should know that all these materials are client approved, and you can, download them, you can read them. If you want to share them, you can do that, or even take parts of them and share them if you're a financial advisor with your clients. We also have an email list. So if any of you are not on our email list and would like to be, you can go right to our website and sign up for it. And that means that these stories will get dropped into your inbox a couple times a month, and you can keep up to date on all the work that we're doing. We tend to be a pretty high touch mutual fund company. So if you have a question about our advocacy or the funds, there's someone right out in the hall who works for Green Century that answers that phone. And if you're a financial advisor, you work with one of our staff directly to get you everything you need.
Right. All right, so this is another great plug for the company and for equities.com. Will we get a recording so that we can share it with other people that we know? This has been a thrilling presentation. Congratulations. Paula, I don't know if that's one that you want to take or you want to respond to in writing or.
Yeah, I'm here. Absolutely. There will be the opportunity to share the recording. You'll be receiving an email with us from us with a link, and that will be hosted on equities.com and
Okay.
how to get there.
Okay, terrific. So I'm going to go back to, there's a number of questions here, if we still have a few minutes, that were, I think came in after Leslie organized that first group. And the first one is from Dana Bagshaw. And Dana wants to know, she doesn't understand in our fund that has the largest number of holdings. She doesn't understand what a proposal for shareholders means. What does a shareholder proposal mean for within a mutual fund that owns multiple companies? I don't know how many you average in your portfolios, Leslie.
We hold about 600 companies across our 3 funds. And so my answer to Dana, hi Dana, was that the equity fund has the largest number of companies that we invest in. And it is a custom index fund. And so that means that we're following an index that's been created. And we don't pick and choose every single time what's in there. So if we're invested in a company and it has issues that we want them to address, we make sure we're engaging with them.
Okay. And
Annie, you could answer the shareholder resolution part.
Yeah,
Sure.
essentially, shareholder resolution is essentially, it's a 500-word document that we submit to the company to include on the ballot at their annual meeting so that all shareholders can essentially vote on the issue that we're bringing forth. It's, we're limited in the information we can convey in that proposal, but we make really good use of that space. And it essentially invites all of the company's investors to weigh in on the question at hand of whether or not the company should, stop deforestation and supply chain, set climate targets, protect animal welfare, reduce plastics, et cetera. So that's what a shareholder proposal is. It's a proposal that the company take a particular action and all shareholders have the opportunity to vote on it.
Okay. All right, here's another anonymous question. And Paula, why don't you just let us know when we've got 1 minute left, and we'll answer one more question. But for this one, how does Green Century deal with the worldwide politics that plays such a role in sustainability? Such a huge role in sustainability, sorry.
They do. We obviously pay attention to what's happening in the US in particular, and we try to work with the companies within that particular context. So with each change in administration, there might be changes at the SEC or things like that. But generally, corporations are marching forward on sustainability of their own accord and pushed along by Green Century and others. And so we pay attention to it, but we're just going ahead regardless of what is happening, and they're happily responding for the most part.
Okay, good. All right, so well, we've already answered this one, I think. Where does all of this great program get shared? Then there's one more question.
Sorry, Paul, you asked us. Let's use this as our last question. Just want to
Great.
make.
Okay. Do you have a particular one that you're focusing on, Paul?
No, I'm not. Thank you.
Okay. All right. So here's a good one to end on. How and where do you share these inspiring climate stories to showcase your work and motivate investors?
Well, again, we share them on our website, where you also can find information about investing in the Green Century funds, and bringing that information to your financial advisor or doing it yourself. And also, if you sign up for our emails, you will get these stories dropped right into your inbox. And if you are an investor, particularly a financial advisor, and if you're using the Green Century funds, you'll have meetings with one of us from our staff, or even have Annie on a call to help brief you and your clients about the ins and outs of this.
Terrific. Well, I want to thank Leslie Samuelrich and Annie Sanders of Green Century Funds very much today for participating in this webinar. Paula, please accept our thanks also for equities.com being the sponsoring community for this program. And it's been a very enlightening afternoon. So I look forward to doing this again sometime.
Thanks, everyone.
Thank you.
Okay.
Much.